All right, good afternoon, everybody. Just wanted to do a quick sound check here, audio, video. You should probably see our beautiful faces up here and the slide that we've got up. If you can hear my voice, you don't mind, just type a Y in the question box there or the text chat or whatever you got there and let me know that that's all coming through okay for you. All right, looks good, looks good. All right, looks like everything's going. So let's get ready to rumble. All right, so welcome everyone to the Roundtable 2023 webinar hosted by FFR Trading and Trader's Edge. My name is John Matteson. I'm the Senior Strategist here at FFR Trading. I'll be your host for this special Roundtable event. We're excited to have you join us for this highly anticipated webinar. And this year, we've secured two renowned traders to join us here, Lee Gettess and Joe Duffy. Both have decades of experience trading the markets. Lee developed one of the top trading strategies in the world, as ranked by Futures Truth. Joe's a prop trader who traded one of the top with one of the top banks in the world. Was ranked the #1 analyst by the prestigious Greenwich survey, and was a 3-time top 10 finisher in the United States Trading Championships. That's a real money trading competition. Both traders will provide us with some invaluable insights into the strategies that work best for them over the last year, as well as how to adapt your trading strategies going forward, and how to deal with the current trading environment and what they're seeing moving forward here into 2023. I'm also going to introduce you to the president and CEO of FFR Trading, Michael McGinnis. I'll have a little Q&A session with Michael in just a bit, just find out, why FFR Trading came into existence and what FFR Trading's role is and how we help, traders reach their financial goals. And finally, we'll have our roundtable Q&A with Lee, Joe, and Michael. That'll be where you're invited to ask questions, pick the brains of some of the world-class traders here, and someone who's been dealing with and vetting many great traders over the years, including Joe and Lee. Another name that you might be familiar with, Russell Sands, one of the original turtle traders who started our Turtles Commodities program here at FFR Trading. So lots of great stuff in store for you here. So let's get started. And just a reminder that everyone who stays through the end of the webinar here will get a copy of Lee's book. It's Lee Gettess on day trading, and Joe's book, Pinpointing Trend Change Points in Price and Time. So stick around, and you don't want to miss on that. All right, you should see a risk disclosure popping up here. All right, trading is risky business. I think you guys know that. That's one of the reasons we believe it's best to leave this in the hands of an experienced, well-seasoned trader like a Lee Gettess, like a Joe Duffy, who have had success in all market conditions. All right, let me first bring on Michael. Let me see if I get my slide to move along here. There we go. And all right, Michael, if you would just go ahead and test your mic, make sure that's working. We can hear you okay.
Yep. Hey, John. Thank you.
All right, perfect. So again, guys, Michael's the president and CEO here of FFR Trading. Michael, some of the people here are clients of FFR, so they're familiar with you, they're familiar with what we do here, but many are not. Some may have never heard of FFR Trading, even though we've been doing this for 15 years now. So I just wanted to ask a few questions to kind of open up what was the genesis behind FFR Trading, and what is it that FFR Trading does?
Yeah, thanks, John. And if you're looking at the slide that John has up here, there's a few bullet points that goes over, covers a few things that we do and why we're in existence. We are a boutique vetting company or verification company. I like to categorize ourselves as that. I started this business back in 2006, but prior to that, I was introduced to this market and sector, and it really was very, very difficult. And you're talking, early 2000, late 90s, that very difficult to do some research and try to vet out a real and successful trader. Back then, Google, as we have today, was non-existent. So trying to research somebody back then was very difficult, and you had to go off and rely maybe on your broker at your brokerage firm that you're using on that side of it, as far as getting their reference. But primarily, we came into existence because of that. We wanted to find something or a source or some type of step-by-step process to vet out these so-called gurus that are promoting themselves. And like all of us, I mean, we've all been burned or tried something, and it really wasn't what it was told the system was, or the person was, or what they were doing. And I ran across a lot of those investments myself and been burned. So when I started FFR trading, I wanted to come up with a verification process and a resource or a source for individuals that could be helpful for them in finding a true and real and successful vehicle for their own investments. And I started FFR Trading, which FFR stands for Financial Freedom Reached. That's our goal with every single individual client that we run across or we talk to. Our goal is to find out what you're looking for, what fits what you're looking for, what's going to fit your goals, your experience levels, basically what you're suitable for, what your qualifications are, and let's try to pair you with something that's within our wheelhouse. All of our, and we do have a very rigorous, which I think we're going to cover on the next slide here in a minute, but we do have a very rigorous 8-step certification process that we take each trader through. Both Joe and Lee are, we're partnered with them to be their source as far as a support system for new individual retail traders that are looking for help. And so to speak, we're that middleman. So from the retail investor that's out there searching and doing their research to the institutional level trader like Joe, like Lee, and the other traders within our wheelhouse, there's a connection that's missed, and that's where we come into play as FFR Trading. So what our audience today and individuals that we really try to convey why we're a good resource is because the retail investor, really the only vehicle they have to do research is through Google. 99% of the time when we're talking to our clientele or individual retailers, when we run across and speak to them, that's what they do. They just jump on Google, and it's a great resource because you can have a lot of information at your fingertips. But on the flip side of that, it can be your detriment as far as trying to do research, because if you go down one rabbit hole, you end up going down another rabbit hole and another rabbit hole, and then at that point you're lost. You got information overload as far as what is out there, and then you get really confused, and you may take a snap decision judgment on buying a system, and then you find out it's really not what it was, and you end up losing money. And that's a lot of times we hear that. So we have a process, because we're an organization, we're a company. Individuals like Joe and Lee, they know that we can do a good job for them in finding good clients that we can partner with, and they can truly help in their research and finding a vehicle for them that best suits their trading means. And so when we start our 8-step certification process, just a real, if most of you are looking at John's screen here, we do go through a pretty rigorous process step by step. Every single trader that we work with or partner with is referred to us by a reputable third-party source within this industry that's been around for 20, 30 years. We've had traders referred to us by other traders that we're partnered with. We've also, or other affiliates that we're partnered with. Each trader, we want to know what their background is. So each trader does go through a application or survey. We try to find individuals that are licensed, so we can do a thorough background check, either through FINRA or the NFA or some type of government body on that side of it. Not all of the traders are licensed. You don't have to be licensed unless you're managing money on that side of it, but we do like to look at that. System disclosure. Each of the traders, we go through the system thoroughly. We want to make sure it's not over trading. And I do apologize, John and everybody. I have these a new building here, and it's all motion censored to help save me some money on my electricity. But if I'm not moving, the lights go off. So, but yeah, so system disclosure. We want to make sure that it's viable, something that we feel our clientele would be able to grasp onto. It's not over trading, and it's making sure that the risk management rules are in place. We want to make sure that all of our traders have 15+ years of experience. The two guys with us today, Joe and Lee, thanks for joining us. You guys both have 30 years plus of experience of being in the background. You guys have, traded through various different presidencies, wars, collapses, and you're still standing today. And that's what we want to look for, right? They do back testing, and we look for brokerage statements as well. And then we do a soft strategy start. So that's our process, and it's pretty thorough. And it goes a little bit more deeper than even that. But that's the overview of what our format is when we are introduced to a new trader. So that's the whole premise of our company. And we want to make sure that we are a good resource for our clientele in their search, because they do. I mean, everybody needs some help out there. I mean, we hear a lot of nightmare stories of what individuals have purchased or what they bought or how much they've lost, and they've tried. Most of our clientele, we've heard that they've bought 20 grand in newsletters or different types of courses they found on the internet, and they've lost 40 grand when they come to us. And once we align them with Joe or with Lee and their programs and their systems and strategies, then we're here to help nurture that client through their journey on that side of it. So once they do get involved with us, we're here every step of the way to help manage what's going on with your trading on a day-to-day basis. So yeah.
And let me ask you, Michael, because I think some of our clients, but a lot of people out there don't realize FFR isn't just providing a signal service, with these traders. There's also a financial education component to this. Can you talk about that a little bit?
Yeah, and I'm sure Joe and Lee can chime in too at some point and talk about that. But most of our systems we are looking for that we partner with, because a lot of our traders, we find a lot of new traders in this industry, especially lately. We're running across a lot of people that's only traded for a year or 5 years, and they're looking for help to learn as well as they're going through the process of taking trades. And each of the programs that we partner with, that Joe and Lee and the other traders offer, do come with a level of education. And the biggest thing here, I think, is the key component, is that all of the traders that we work with, especially Joe and Lee, are very open to having communication and conversation with the client once they've gotten involved. And I think that's a huge help, because if they have any questions or concerns, I mean, the answers are there. It's just a click away, an email away, or a call away to the professionals that we work with.
All right, fantastic. All right, much appreciated, Michael. And we'll hear more from Michael when we're in our roundtable. We'll have some questions. And you guys, if you have questions when we get to the roundtable, you're going to be posting those. So what I'm going to do at this point is I want to bring in our first trader, Joe Duffy. And Joe, I'll get ready to switch over to you because I think Joe's got some charts that he does want to share with you guys. So let me go ahead and make you the presenter, Joe. You should get a little pop-up on your end. And let me just make sure your mic is working.
Okay, can you guys hear me?
Yep, perfect.
Okay, just let me see if I can get rid of this. So I can just X out the pictures. Close the, that won't close anything important, right?
Shouldn't.
Like I'm seeing all your guys' faces right now. I'm gonna disclose that. That's not gonna cut me off, is it?
It should not. It should
Okay,
not.
got it. Okay. All right. Okay, I'm just gonna talk for like 10 minutes about some of the process. People seem to be interested in the process that you go through, at least that I go through. It's different for Lee, it's different for everyone. One of the things that I use is something that I developed myself, and that's this little indicator here. And it's a little bit more sophisticated in that what I'm going to be able to show you today, in that it's a 3-step process, but this is the major part of it. Basically, the green histogram will tell you which side of the trend you want to be on. So as long as it's above 0, and basically you want to be trading on the long side, and vice versa. My preferred strategy has always been to try to, well, many years ago, and Lee will attest to this, my major strategy was try to pick the top and pick the bottom. But that's evolved into, let's trade with the trend and trade the pullbacks in the trend. And so what this does here that I've developed is it helps me determine where those places are going to be. So basically, as long as this histogram, the green part, is above 0, I'm just looking to buy, again, simplified. It's not this easy, but you kind of look for it to get below 0 and turn up. If you're following my cursor, you can see where the buys are kind of developing here. And I hope you can see my vertical cursor. It's not right every time. Sometimes you get little ones like this that work to a very minor degree. Here is a sell right down here. You got a sell here that, again, worked to a minor degree before it ran you over. And then you've had a series of little buy opportunities on the way up. So without going into too much detail about what I combine it with, basically it's just combining it with a longer term chart to show me what the bigger picture is, and a shorter term chart to maybe even fine tune these setups and trigger the entry. Okay, so that's one of the major tools that I work with. It's not it sort of codifies everything that I like to do into one chart, and that makes it pretty simple for my little brain. So that's one of the things that I have hung my hat on for a few years now. And again, it's also something that everyone else is looking at because no one else has it. Okay, and I want to show you one other thing that's a cool way of looking at charts. And just let me see here if sorry guys, just let me come back and see if I have the chart I'm looking for. Oop, that's not it. Okay. Where's my 60? Okay. You know what? Perhaps I took it off. Did I take it off? Okay, let me see. Maybe I did. Guys, just bear with me for 1 sec. I apologize. I thought I had both these charts up here, and clearly I didn't. I had 2 of the same chart up. So let me just see if I can quickly add in the indicator that I wanted to talk briefly about today.
And Joe, while you're looking for that, some people are asking, is that the TradingView platform that you're using right now?
Yeah.
Okay.
You know what? Like, it's amazing. This platform, I think, has grabbed everybody. I don't know if it's grabbed Lee, but eventually it's it's become the sort of de facto industry sort of standard. Okay, so what I've got here, guys, is we were all familiar with how volume used to look. It used to be underneath the bars, and it would show you. In fact, let me get rid of this so we have a little more space on the screen. The volume used to be at the bottom here, and if I had prepared this as I thought there was an extra chart, yeah, I would have shown you. But the volume usually is at the bottom, and there's the volume for each bar is posted. So that tells you the volume on each bar. What this tells you on the left is the volume at each price. Okay, so a price that trades many times, or a price that has a lot of volume that trades at it, will be represented by a longer line. So you can see, if you go back here where all this volume is, or the most volume is right here, it's because we spent all this time in this consolidation, and that's why the most volume is there. So what I've noticed is a couple of things. One, that price is often attracted to and will then be repelled from areas where there wasn't very much volume. So if I draw this line in here in this area where there wasn't very much volume, you can see that it was kind of, it had been a little bit of resistance here, and then once it cracked through it was just there. So I kind of know that this is an important level for the market, right? And we can do some more here. And this is the S&P, but we can do individual stocks. You can see here this low volume area. The market was attracted to it, and then it repelled it right there. And then same here. And then when it went through, boom, it came back to test the area again, and then off it went. Okay. We got a relatively, well, somewhat of a low volume area right here. Again, you can see you acted as resistance, 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 got through it, came back to test it, and it went off. So it's just a kind of a cool thing that the market, it's just a different way of looking at the market that we haven't, that hasn't been available for, certainly when Lee and I started trading, it was a straight volume bar. So it's an interesting way of looking at the market. And any of you who are using TradingView, you can easily, bring this up. This is the one by Lux Algo. I think there's many representations of this, but it's the one by Lux Algo. And, I find it useful to look at because it's really, really, really simple. You can tell in a second where your potential resistance or support may be for the coming day. And it works on lots of different time frames as well. So those are the two things I wanted to talk about. It's something that I do that's proprietary to myself, and something that you can use on TradingView or probably most any other platform. That's a cool way to find key levels when you're trading.
All right, great stuff. And Joe, just what were some of the challenges maybe that you had last year, and then maybe what worked for you? Because obviously you had a positive year in a bear market. You had a nice return. In fact, you were up in 2021. We were just talking about you were up 80%, and you were also up in a bear market. So
right.
What did you have to change?
To trade. I traded extremely conservatively in 2021 with very kind of with spreads and so forth, and I still almost largely use spreads. I only had one loss in 2021, but it was a much, much different environment than 2022. And as Lee and I talked before this webinar started, the market continues to evolve very quickly. And one of the things that's happened is options used to be a derivative. That is, they were the derivative of the stock, and the leader was the stock, and the options followed around. But what's happened is that options have become such a big investment tool that the last I looked, I think the notional value of options traded is about 1.7 times the value of stock traded. And because of that, the options are actually wagging the dog now. And I'll just explain that very briefly to show you how. If an institution or tons of retail comes in and starts buying calls, the market maker has an obligation to sell those people calls. Okay? That's what his job is, to make a market. So he can't say, no, I don't want to sell any calls. He's going to sell them calls as long as they want to buy calls. Now, what he does to lay off his risk is he will be long stock in the market or short stock in the market, depending whether it's puts or calls, to offlay his risk. And his profit comes from the fact that the option always has a time premium. But what happens is if the market's going up, people are buying calls, he has to buy stock to offset it, then he's a factor in the market now, because he has to buy all this stock to offset all the calls that are being bought. So you're getting this self-fulfilling cycle of markets are going up because people are buying, and people are buying because markets are going up. And it's such a significant force. It didn't used to be a significant force when options were a small, periphery derivative to the stock. But now it's their notional value is more than the stock, so they're quite a large effect. So that does have an effect on the market for sure. And so that's one difference: the evolving of various algos and strategies, and how all this stuff is changing very, very rapidly. So that is one difference for sure. And it's the landscape is shifting, like, honestly, I would at least say month to month. Since we started having options that expire every day on the major indexes, that's been a major force. And there's yesterday, I think, was one of the largest option days in a while, and the open interest in options hardly changed. So what does that tell you? Is that almost all of it was on 0 day to expiry options. So they're pushing the market around that way. So it's definitely different, and that may be way too long of an answer. So I apologize.
No, not at all. That's very insightful. I hadn't thought about it that way when you talk about options kind of dominating now, but you can see it. You can see it in the price action. All right, so thanks, Joe, for sharing some of those insights. I think many are going to find those helpful. And just a reminder, guys, I'm going to bring Lee on in a second. And once Lee's finished with his presentation, we'll bring everybody in for the roundtable and the Q&A. So have your questions, your comments ready to go there. All right, I will switch over from you, Joe. I'll take this back. And you guys should see my screen. Actually, you should see Joe's beautiful, big, beautiful face right there. And I know Lee's chuckling, but your time has come, Lee. So there's Mr. Lee Gettess. So Lee, I want to bring you in now. Give us your perspective on the market. I know you've got you like to keep things simple, but the market action last year, what were you seeing? What were your thoughts? Now as we move into 2023, there's a lot of talk about recession. What effect might that have on the markets and the way you trade? Yeah, it would help. Would help if I turn your mic on, right?
Yeah, that's good. Thank you, John. First of all,
that was Joe made me do that, by the way.
Okay, well, that's a great question, John, and I want to get to that. But let me just say this: Joe and I have known each other since at least the late 1980s, which proves that we are both exceedingly old. But in all the time I've known him, he has such a unique way of looking at things, and is able to come up with stuff that works for him that I don't see other people doing. And I'm always impressed by the stuff he comes up with. In terms of the market, let me say also in my defense, Michael asked me last night to put a presentation together. Well, I don't have time to do that. So you're just looking at my screen, and I'm going to try to tell you something hopeful. I see a lot of doom and gloom in the market about how the market's going to behave this year. Oh, it was so bad next year, and you haven't seen the worst of it. It's just going to be horrible. Now, let me say, my long-term viewpoint is absolutely as worthless as anyone's. I have enough trouble figuring out where they're going to be in 6 hours, let alone in 6 months. But since World War II, I believe there have been 12 bear markets. A bear market defined as any time the market drops 20% from a high. 7 of those 12 ended in October. Now, I don't have a chart to show you right now, but if you go look at any chart of like the S&P 500 or whatever, you'll see that right now, anyway, October 13th, I believe, was the low. I can't promise you that is the low, but I think there's a really good chance it is. 7 out of 12 isn't 100%, but no other month has had more than 1. Now, is that because the portfolio managers are buying at the end of the year and want their portfolio not to look so? I don't know. Honestly, I don't know. I just know it's there in the data. 7 times the bear market ended in October, and it sure looks like it might have just done that again. So regardless of what you guys hear, that's what I think. I think that might have been the end of the bear market. And obviously, if we make a new low past October, then I'm wrong and we'll have to deal with it accordingly. But right now, I'm kind of positive on the market. And there's another thing that I find sort of amazing. And I assume my data is correct. I assume everything I looked up is correct. I'm sorry if it's not, but I believe it is when I tell you this. We've had real political turmoil in the country, and we had a rather bruising midterm election. A lot of nasty stuff going back and forth. Well, I don't want to get into it, but midterm elections, we have a year that the market trades after a midterm election. And since 1950, do you know how many of those midterm years, the year after a midterm election, do you know how many of them have gone down? None. 0. That doesn't mean they can't go down this year. But I kind of like the odds that, maybe some of them haven't been up very much. Some of them just barely eked out a gain, but some of them were up substantially. I just think everybody thinks things are horrible. I have reason to believe they're not. I'm a little bullish on the market, and I'm sort of leaning to the long side fairly heavily in what I do, which I did not do last year because, for obvious reasons, the market was going down. So again, I'm not a long-term trader. Don't take me as a source authority for long-term stuff, but there's a couple of pieces of information that I hope will make you think a little more positively about what might happen in the U.S. stock markets in the coming year.
All right, excellent stuff. And it kind of leads me into, I was looking at some data as well that talked about it's very rare that we would have 2 negative years in a row. And I forget what the statistics are or what the numbers are in the last 50 years or whatever, but it's not often that you have 2 negative years in a row. Am I correct on that?
You are, John. And all I can tell you is I turned bullish at the end of last year, and so far I'm pretty happy I did.
Well, your results of the O-Force program anyway speak for themselves. I think you're up 90% or something for the year, in a year where my travels, I talk to people in their 401ks and they're getting crushed, and I say, wow, we got traders that are up 80-90% this year, and then people just can't believe it. But so well, you are chart driven. You don't listen to the noise. You basically let the chart tell you. Is that kind of your approach?
Yes, and let me say this. I saw a screen someplace that I said I was going to talk something about options. I will tell you how I use options. I consider myself an analyst, a chart analyst. I'm not even a good trader, but I'm pretty good at analyzing charts. And I have found that when I see something I like in the charts, I can execute it in options because I can get the limited risk that goes along with that. And that's the most important thing to me. I want to make money, but I'm not driven to try and make the most money possible. I'm driven to control the risk as much as possible. So, by buying an option, if I think the S&P, the SPY is a buy, let's say, instead of buying the ETF or buying stocks or buying futures, I'll just buy an option on the ETF. And the amount I pay for that option, that limits my risk. I can't lose any more than that. I try never to lose that either. And I don't believe we have ever, but it could happen. I know it could happen. That gives me great comfort to know that my risk is completely limited. And so that's essentially my primary way of trading options is I use options to execute in whatever market I'm analyzing.
All right. Anything else that you want to share with the folks out there before we hit the roundtable? You'll have plenty of opportunity once we open it up for everybody here. Anything else that you want to share, Lee? Those are some great views, perspective on things. Really did put things in perspective.
I'll share anything anybody wants. Hopefully they'll beat us up in the Q&A.
All right. So let's. I'm going to bring everybody in. Actually, I'll kind of take myself out of the equation here. So we've got the big three here. That'll allow me to be able to field the questions here, and I'll field the questions and pass them along to you guys. So guys, go ahead and post the questions. We'll go ahead and start the roundtable here. Let's see.
Yes.
Okay, so let's see, Dana, let's see. My question to Lee and Joe would be, if you have the ability to be free financially yourselves, why do you bother with all of us? That's a common question in this.
Do you not want me to?
Well,
I kind of enjoy it, actually. I enjoy people. I enjoy feeling like I'm helping someone. To just try to make money and pile it up and all seems, I don't know if greedy is the right word, but it just doesn't seem like a fulfilling thing to do. I enjoy trying to help people. I'm sure that sounds lame to you, but it's the honest truth.
I'll just tell you, I heard from another trader that he made about $200,000 in his trading, but he made $800,000 selling DVDs. Right. Wow. So that's one of the reasons.
Wow.
If you, that a trader might think about multiple streams of income. It's always good to have multiple streams of income. One of the things I learned after 9/11, I was a stock and option trader, and they closed the markets here. Right. You couldn't make money. Gotcha. That's when I had to learn somebody said, well, you should trade the DAX over in Germany. That's the German market, like their S&P 500 over there. The DAX futures were still trading. They said, you trade that. So, but anyway, yeah, it's always good to have multiple streams of income, guys. Always good to have multiple streams of income. Okay, let me, guys, what do you think about the effect that QE, or now that QE is kind of come and gone, it kind of supported the market. We had the crash in 2008, a bottom in 2009, and ever since we had a raging bull market until January of last year. Now that the fact that the punch bowl has kind of been removed, what do you think the impact is going to be on the markets?
You want to go, Joe?
Oh, I'm sorry. I've got everybody's mic on. Sorry, Joe, go ahead.
Yeah, I get the economics question. Thanks. Okay.
I
still think, and Lee's been right in his analysis from the bottom. Absolutely, he had it nailed. I think it matters a lot. I think it matters a lot that there's no QE and that we're in a rising rate environment. I think it may take some time still for it to manifest. And when Lee was talking, the first thing I thought was, yeah, this October, wait till you see where we are. That was my thought. I still think that the market's going to move lower. I think the Fed has been very clear that they aren't going to take their foot off the gas pedal. And I see the forwards are pricing in starting to cut in late 2023. I really doubt that's going to be the case. I was reading an article the other day that the Fed had actually said they're looking at two things. One is PCE, and the other is employment. And right now, PCE was unchanged today, so that's basically another inflation measure. Personal consumer expenditures, and the other is unemployment. And right now, like until people start losing their jobs, I don't think the Fed's going to take their foot off the gas. And I also don't think that the Fed likes the S&P up here. I think they're trying to squash speculation. And so I do think that the market's going to move lower. And, I think in another environment, perhaps 20 years ago, it would have moved lower already. But for some of the things I already talked about, it's just a little bit, maybe a little bit crazier now. But I do believe the market's going to move lower still.
And isn't that interesting that we have exactly divergent viewpoints to that? We're supposed to both be good traders and we disagree, but that's what makes markets. That's how it works. And I can guarantee you, even though I disagree with him, I think it's going up, that we both will react to whatever the market does and deal with it accordingly. We're not going to get stuck with a concept that we can't get over.
Yeah, and it's also one of the reasons I'll trade a spread, because, I can put a bull spread on and flip it around to a bear spread. And I'm still, because it's a spread, I'm still getting that advantage of not paying away time as much and then starting to get time working for me. And I can switch from bull to bear just by changing one of the legs of the spread. So, and I will flip. And I have done lots of times. But right now, and the other thing that I see right now, and watching it during the day, there is a monstrous lack of liquidity out there. I mean, it is scary. I'm watching them run stops, and they are just plowing through and feeling people way off the price of the stop. And I'll tell you what, if this thing starts to move lower with that low liquidity, it can be a real mess. It scares me, honestly. It's scary.
Interesting. Now, there's been multiple questions about how you guys pick your options. How do you pick your strike price? How do you pick your expiration dates? I know, Lee, you've got a pretty simple strategy, I think, when it comes to that. Maybe you start and share your perspective on that.
Oh, I got a pretty simple everything, John. That's just my whole life is simple. With any of the programs that I use, we usually have a price based on something in the underlying equity or ETF or what have you. And we try to get a strike price that is as close to that price as possible. That is about a month out, because we like to be able to hold trades. We don't hold them a month very often, but we like to have that freedom to do that. So we want them to be about a month out, and we like the price to be under $6. And there is absolutely nothing technically savvy about that. It's just quite simply a $5 stock, $5 option can double easier than a $10 option can. Nothing more complicated than that. So we like reasonably low priced options so that we can keep the risk reasonably low, and about a month out and as close in strike price as the price we want to buy the underlying or sell in the case of puts. That's where we're going.
And now, Joe, you're trading spread. So how does that,
well,
how do you choose those?
It matters a lot, because I can be equally bearish on Zoom and Amazon, say, and I can set up a very, very similar spread, and one will be a lot better deal, if you want to use that wording, than the other one, because options aren't always priced in my experience efficiently. A lot of times they are, but a lot of times they aren't. And so I will do it based on, if I can buy a spread where I pay 2.5 to make 2.5, or I can buy a spread where I pay, $1.75 to make, 3.25. both adding up to $5, the difference in the spread, then I'm going to pick obviously the $1.75 one. And you do see those discrepancies in options in stocks where a very similar percentage move would create a much bigger move in one spread than another. So that's one of the ways I pick. Another way is if I think the market has a chance to really move substantially, then I'll go a little bit further, up with one of my legs, say, if I'm doing a diagonal or something. So, there's that to it as well. But I look to see, which of the stocks that I follow or which of the stocks that I like looks to me like it has the best chance to move given a certain percentage gain in the stock. And certainly, if you're just buying puts and calls, I find personally, and I know that Lee's very successful with this, so I'm just talking for me here. Generally, the ETF options have a higher threshold that you have to make in order to make money. Like there's a higher time premium in the ETF options. So unless I'm spreading them, I don't like trading. So for all those reasons, that's what I'll pick on. Like I like stocks like Macy's or DraftKings because there are almost no premium on the options, and the stocks still move. So
the other thing I should say about the way we choose option prices is if sometimes we'll come up and the options are just outrageous. We can't find anything that works for us. They're $12, $13 or whatever. Well, then that's just a good reason to pass the trade. If you can't get the risk parameters the way we want it, then we're not going to take undue risk. So we just don't take them.
Yeah, 100%. And from my point of view, that's one of the reasons I like spreads is because when the short-term options, they get bid up and priced at stupid levels more than the long-term options. So that's why I like to buy something far out and sell something close in. Because if we do get in a stupid environment where the short-term options are bid up, then I can get that to work for me.
Yep.
Well, I want to chime in too real quick, you guys. And you guys are not really, you're not trading every day either, right? It's, like you said, Lee, that it's, you got to manage and find what opportunity there is out there. But you guys are only trading about anywhere from 2 to maybe at the most 6 times a month, especially lately, because it seems like it's been the markets have been so volatile, it's been tough to trade, right?
Well, Michael, I'll repeat the mantra that I use all the time. I want the probabilities clearly in my favor, and I want the risk quantifiable and controllable. And if any one of those 3 legs aren't there, then I just prefer not to trade.
And I got to follow it up, Lee. That's why both of you have been so successful, because of your discipline in following those rules. And that's where, and it's just something that we hear too with a lot of our clients is some of their frustrations is they are giving their money back to the market, but they're being very reactionary in their actions on trading. And that's the reason why they're searching for help, and they're looking for help. And that's what, I think that's a big problem that happens out there, especially with what we're seeing. We just talked to a client or somebody the other day, and I think it might have been the guy, Lee, that we were on the phone with last Friday. He was very successful at some point in the beginning of his trading. He made whatever 20, 30 grand in trading, and then literally a few months later gave it all back because he made those simple mistakes of what you just explained. So, yeah.
Well, I think
Michael,
we'd all like to trade, 10 times a week and be 90% accurate. I don't find those type of approaches are available out there.
Yeah.
Right.
Like just to further the question about why I'm still doing it, well, because I'm doing a lot of spreads. By essence or by nature, they're partially hedged at all times. So there's a lot of times I'm not here. you know, I'm not micromanaging this thing all day if I don't need to. And I trade the future still, but I only trade them in Europe. I trade them before New York opens because once New York opens, the computers take over, and you know, I can't do it. So I can trade futures in Europe quite successfully. So I'll trade 2 or 3 hours before the New York Open, and that's it for me. And that's mostly the work I'll do that day, unless I think there's something looking in the options.
And then you see a golf course calling your name?
That's right. That's right. Now, this, let me tell you, but when Lee's talked about simple, okay, that's how his golf game is. Simple back, simple through. 280 yards later, he does it again.
That's the old days, bro. Thanks.
Hey,
But hey, Joe,
Michael,
yeah, go ahead, John.
I wanted to ask, because you kind of touched on it when you were just speaking. You've dealt with a lot of great traders over the years. What are the common threads that you've seen, you know, as to what someone makes, you know, what makes somebody a successful trader?
Yeah, and we have. I mean, over the years since we've been in business and since I've been in this business, I have evaluated a lot of traders. There are some traders that we went through an evaluation with when we first got into business, and we're no longer partnered with them because they started, it didn't work out. It's just one of these things where in the beginning, they had all the discipline, they had all the rules in place, and all of a sudden, a year down the road, as we're trading live, they start to get this overwhelming responsibility to make sure they're getting all this input from the clients, like, hey, why aren't you trading more? Hey, we want to trade more. And then what happens, even with them, I mean, there's been a couple of traders that we've had that went against what Lee actually just talked about. They went against the discipline, and they ended up started trading more frequently because that's what they were hearing from their clients and our clients. And it's just really, that's just not the way to trade. So what we found and why we actually, I mean, there is a lot of good traders out there. There's a lot of great traders out there. And I'm not saying that the 7 traders that are within our wheelhouse with FFR are the only ones out there. No, there's a lot of really, really good people out there that trade the markets and are very effective in their methods. The traders that we do work with, I would say some of the positives that make them such a good trader is what both of these guys are talking about today. They have a strategy in place. They're very disciplined in following their rules and the risk. And the one thing really that, you know, 2 of our main goals with FFR is our client success and their retention. We know if we can keep them successful and they find successful strategies, they'll come back and look at other strategies with us and look at buying more programs, you know, on that side of it. With us in our wheelhouse, we want to be a one-stop shop, be all for all of our clientele. But, you know, with, you know, Joe and Lee, for instance, they're great traders because they're very disciplined. They don't over trade and they stick to their methods. And then a lot of cases, I mean, Joe, I'm going to speak for you a little bit because you and I talked about this. You've been hammered with a lot of our clients. Like, why are we not trading? Why are we sitting on the sidelines? And your response is patience pays, right? And because you really care about the clients, and both of you guys do. And you really thoroughly enjoy what you do. It's a passion that both of you had. One, you know, the other question earlier from somebody, John, that asked, you know, why do you guys do this? If you guys are so successful, why do you continue to do this? It's because I feel, and the conversations that we've had, you know, together, is that you truly have a passion for what you do. You love trading and you love helping people. And the same 2 goals that I have as a company with success and retention seems to be aligned with the goals that you have with our clientele as well. Because you know that if you can keep our clients successful, and you know, I've heard you tell me this many times, and Joe, you as well, both of you, is that when you guys take a loss in the marketplace, it definitely stings for you guys, but it really stings because you say, I hate losing for our clients.
Oh man.
It's the worst, right? It's bad because you know they took a hit. And those are things, John, that I look for in great traders. I really do. And why I love partnering and being a source for Lee and Joe to find new clients through. And, you know, and I try to do the best job I can in finding great partnerships with great clients that want to learn and want to be able to follow you throughout the journey that they're looking for in the success. So, you know, I think I answered the question, John, you know, that's what really makes, in my eyes, really good traders, is just that passion for helping people and staying disciplined within their strategies.
No, it's a great answer, Michael. I really love that answer, and I appreciate. It's hard not to like Lee and Joe. I mean, they're just kind of lovable guys. But I can
They
see
can
why
be
you
a
brought them
pain
on
in the
board.
butt sometimes, though. They can be a pain in the butt.
But now it kind of leads me into Dana, I believe, is one of your subscribers, Lee, to O-Force. He said you traded the QQQ, IWM, and SPY recently in what seemed like a down phase, and those positions stayed underwater for a while. I expected that you were going to close them with losses, but you hung on and waited until they each made good money. How did you stay calm during that period?
Well, I think it's sort of like a duck in water, right? On top of the water, I look calm.
He's a dude.
We came rather close to closing a couple of those out. I mean, we have parameters that say, okay, this is it, we got to go, and we just didn't quite get there. So that part, at least for me, is easy. I've been doing this for so long. Larry Williams once told me, he said, did you spend a lot of time developing this system, Lee? Yeah, put a lot of hours into it? Yeah. He says, why don't you trade it? So as long as I'm trading the system, I'm comfortable because I know what I should expect over time on that. I don't know what any individual trade will do. You know, I can be as wrong as anybody, but it's okay. I know what I should do over time, so I just do it. It's not that hard, really, for me.
So one of the questions that came up again, I think we talked about it earlier, but Dennis was asking, you know, we've had that huge bull run, you know, from the March lows in 2009 up to January of 2021. What are you guys' thoughts on, you know, will we revisit some of those levels at some point? What do you guys think?
Highs, you mean?
Yeah, so I guess, you know, those levels, maybe the peak before the crash in 2008, is that something that we might retest at some point?
Yeah, I don't know. I'm going to tell you why I think so. One of the reasons is because it's the way they calculate the averages, and if they don't like it, they just change it.
Move stocks in and out.
Yeah. So yeah, because if a stock's going out, if a stock's on the bottom and it's doing lousy and it's going to drag down the average, they just swap in one that's going up. So yeah.
That's true. That's true. Yes, I expect to see new highs, John. I'm not going to give you a time frame. I'm not telling you this month, this year, this century, but I expect new highs.
And Lee,
I really think that it needs a cleansing first. And even if it cleanses, so what? You know, I agree. It'll come back, but there's some stuff that needs to get. I honestly think that we need to see some more regulation. I'm not usually for regulation, but oh man, you know, Congress trading on insider information, and and they're not the only people. I don't know. Like I said, I can't trade in the New York session, at least not futures anyway. I'm not up to it.
And John, don't ask me because I'm not the expert, they are. So, but I don't know which way to go now, you know.
Yeah.
It's, where the markets go. But no, I agree. You know, there's going to be a little pullback. I think Lee is on point with the long on the bull. I mean, we have a, you know, as you, I don't know if you, I think you guys know, we follow the turtles and we follow the commodity strategy. And even in the commodities markets, I mean, they're saying that, the analysts are saying that we're looking at a bull run on the commodity sector. I know that's completely different because we're talking about futures markets and the commodity sector, but I know that's a complete difference from what the options in the stock market, because they do trade somewhat differently.
Yeah,
But
well, if there is a run in the commodities, it's not good for stocks. My opinion, anyway. Yeah,
That's usually true. It means inflation.
Yeah, exactly.
And let me say this, I've given you a long-term viewpoint. I'm bullish now. I'm bullish for the year, essentially. Nothing to me is more important than price action. And if it starts to look like they're turning around and heading south, I hopefully will recognize it, because that's what I do. I analyze markets, right? So I'm not stuck to the idea that I'm giving you that it's bullish, but I don't think QE going away is the biggest issue. The easy money's gone because QE's gone, but we had an awful lot of years with no QE when the market went up. So I'm not overly concerned about that. I'm bullish, but I'm looking at the market.
Can you guys kind of walk through your process for like researching and selecting trades?
Well,
go ahead, Joe.
No, I was going to say, I think that, not to speak for Lee, but Lee has a strategy that he's coded, because that's what he is. He's a computer programmer, among other things. So it's probably a little bit easier on him, and that's why he's such a dude and so cool all the time. For me, I'm a little bit more discretionary. Like, I showed you some things that I look at, which are, I would say, what's the word I'm looking for? Semi-discretionary. There's rules with them. Like, I showed you the scoop thing that I looked at first. I have rules for that and things that I like to look for at. But ultimately, there's a little bit of discretion with it. So I tried to show you a little bit of the process that I look for. Basically, for me, it's what's the big trend. Wait for the pullback and see if it sets up into something I recognize. Not every pullback will. But and that's as simple as that. Just trade with the bigger trend, but trade with it when it's correcting.
John, I'm going to answer your question as a general sense, rather than address an individual approach and go, well, for O-Force I do this, for PMT I do this. In general, I've spent an awful lot of my life staring at charts, and it's usually something I think I see. Wow, I think when this happens, the market goes up. And then I attempt to quantify what that is I'm looking at. I attempt to be able to go back and test and say, well, does this really go up when I see this? And I've said many times, 98% of what I think I see sucks. It not only doesn't work, it's not bad enough that I could do the opposite. It just sucks. It's a waste of time. But every now and then, I find something that really does lead to a move in one direction or another. And if I can get it quantified, then I can sort of wrap a trading plan around it. And that's how I identify stuff in general.
And let me, I'll throw one more out there. This is from Dennis. It's kind of an interesting question, because do either of you use AI, which is obviously exploding right now, or machine learning to help guide your trading?
No, I'm afraid AI will control me if I do.
Well, Lee's married, so he's already controlled by AI.
Nothing artificial about that, dude.
Yeah. Do you know what? That's well beyond my. That's. There's been so many attempts at that too, and maybe someday it will. But I think the robotic trading that's actually taking place in the market depends on the fact that the computers are literally right next to the exchange, so that their latency in getting orders in is less than somebody sitting in California, and that millisecond allows these bots and stuff to make money. But I don't think there are many AI machines that are swinging options around and doing it successfully. I don't think there are any, honestly. Yeah.
I will give you a more direct answer, Dennis.
Mhm.
Done some work with neural networks some years back, and it was didn't bring anything forth. It was not helpful. But I've been trading a long time, and I remember trading in the Gulf War. I don't know if you've been old enough to remember the Gulf War, but trading during the Gulf War, I used to say, I can tell a mechanical beast that this structure says you should buy. But I don't know how to tell a mechanical beast this structure says you should buy unless Saddam Hussein has just launched a scud at Israel. I think there's always going to be a judgment on the part of a sensible trader that will help make your trading better, regardless of how much computerization you try to put into it. There's no substitute in any business for the judgment of the owner, if you will. And I kind of view myself in that same fashion. I have all my rules, and I also see stuff that I just go, yeah, well, we're not doing that. I think that's just, that's the way it has to be, in my opinion.
Well, it's interesting perspectives. I know there was an ETF out there that was based on AI. It's currently underwater, I believe. So I guess your job security, you still have job security, I guess is what it amounts to. Michael, did you have something before we wrap up here, guys? Maybe Michael has a few words, some parting words of wisdom from Michael McGinnis.
Yeah, I don't know if it's going to be any wisdom, but
Let me get my pen. Hold on.
yeah, get your pen out, Joe and Lee. Yeah. So, I mean, we've been working together for, I don't know, Lee, we've known each other now for, I don't know, since it's got to be 12 years now, I think. It's been a while. And Joe, we've been working together for well over 5. So my point I want to wrap up here is just letting our audience know that both Lee and Joe bring a wealth of knowledge, years of experience to our clientele in helping everybody hit their goals and what they're looking for help on. Our goal here with FFR, listen, my whole point is if you're out there and you're spinning your wheels and you're trying to find some opportunity, really just, give us a call. Let us chat with you a bit. Let us help educate you on how we can help you. Lee's got 2 strategies that we work with. Joe's got 3 different programs and strategies that we offer on our side of it. If those 2 don't really fit your wheelhouse, we have other strategies that we can help you with. Our goal here is to really get you in a successful position going into 2023 and beyond that. When you do call our company, we care. We want to be, your company that you can rely on, a good resource and source for you. That, when you do call our office, we are going to ask you some specific questions because we really want to get to know you, what your investing challenges are. What you've been doing right, what you've been doing wrong with your trading. And then what we're going to do is we're going to try to tailor fit something that really fits your goals. If, we had somebody that, Joe, I don't know if you know this or not, but we had somebody that loved everything that you did that we presented to them. And they thought they wanted to really learn how to do spread trading. And then they were about a month or 2 in, and this was about a year ago, and they just said, this is really not what I want. I really, it's over my head. And they even tried jumping on your Skype room, Joe, and they were listening to you, but we ended up working with them and transferring them and moving them to another strategy that kind of fit really what they wanted. And now they're happy. They're very, very happy. So my point here, everybody that's within the audience that's listening today, we really have your best interest. right? That's the first and foremost. We want you to be successful. Give us a call. If you're having some hardships out there, give us a call. Let's see what we can do to help you and at least share with you what we found is working and what is successful in today's market climate. And that's what we're going to look at. I mean, both Joe and Lee, you guys have been phenomenal. I mean, we get calls all the time from clients that we've signed up with your services, and we're getting, you know, thanks, and, you know, wow, this is great. Just like Dana said, it was, you know, your trades, Lee, that you took. I was sweating bullets because I thought we were going to take a couple of losses, but you ended up turning that around and coming out with, you know, a couple of really nice profits. And same with you, Joe. There's been a couple of times where I've seen you, like you said, you've managed yourself out of a loss with your spread, and in the end, it came out positive. We had some clients that didn't really understand spreads, Joe, back in 2021, and they were complaining because they thought they were losing. And then once all your spreads came to a close and the net results came out like a month later, they looked at their accounts and they called us back, and I think they called you and apologized because they're like, I'm so sorry, I didn't understand what you were doing. But my whole point here is that we're here to help our clients. So give us a call. Let us see if we can help you. And at the worst that's going to happen is that you're just going to walk away more educated, you know, and what else is out there. So that's what I wanted to wrap up, John.
Just one last thing, if I could, Michael.
Yeah, go right ahead.
For the folks listening out there, I asked Michael to move my account to Lee. So.
Oh, let me ask you guys too. This is a question for Joe and Lee, and I'll probably get a I know I'm going to get maybe a joking answer, but why do you guys like working with us as your service provider? You know, I mean, I know there's a lot of companies out there. We're your sole company that you're exclusive with, in helping us find, you know, clientele for you for your businesses. But why do you like working with my company?
I'm going to give you a real quick and dirty answer, Michael. It's not easy to find people you can trust in this industry, and I trust you.
Yeah, that's exactly right. I've been contacted by at least one, well, not at least, but for sure one other one who laid out the whole thing and how much money you're going to make and blah, blah, blah.
Mm-hmm.
You could just tell it had you know, slime was dripping off it, right? So that's why. Yeah, this is what Lee said, really. Yeah.
Yeah. Well, you know, I can say it's vice versa with our side of it too. We like working with you and representing your programs because it's the same thing. We can trust you. So thank you. I appreciate it. So, all right, that's it, John, I think.
Wow, you can't trust. That's not really Joe. That's a male model he's got standing in for him.
It's AI Joe. Come on. It used to be when we were kids, it was GI Joe. Now it's AI Joe.
AI Joe.
It's his avatar. Well, I'm really feeling the love here, guys, and I hate to break it up, but I just want to thank all our panelists here: Joe Duffy, Lee Gettess, Michael McGinnis, CEO and President of FFR Trading. All of you for your unique insights into the markets, into trading. I know we covered a lot of ground today. We had a lot of questions. Again, just to reiterate what Michael said, if you'd like more information about FFR trading or the traders that we represent here, how they can help you achieve your financial goals, you can give us a call. The number's on the screen there. Give us a call. We do need to speak to you. You can speak to one of our strategists to see, you know, what we might be able to do or offer you based on your goals, you know, what time you have available, your risk tolerance, all these things. We want to make sure it's a good fit for you. But you can also check us out on YouTube. You can search for FFR Trading. You'll see profiles of our traders, who we represent, their performance, and all those good things, and give us a call, and we can take a deeper look into anything that interests you here. So thanks again all to you traders. I think hopefully this has been successful enough. We can get you guys to do this again, and maybe have some new traders on, and look forward to that as well. So everybody have a great 2023, and we look forward to hearing from each and every one of you, and thanks again for being here.
Hey, John,
Thanks, guys.
Yes,
did
sir.
Thanks,
I get the same appearance money as Lee?
Did you what?
It's like live golf. I know the Lee gets appearance money. I want to make sure that.
Oh boy.
Well, you know Lee, he insists on getting more than you.
That's
Well,
right.
Damn it.
They paid
Well, he
you in
deserves it.
Canadian.
That's why my account's with him.
They
Yeah.
paid you in Canadian, Joe. That's all.
Oh, I know. That's right. Yeah.
He insisted we pay him what he lost to you on the golf course last time.
There you go.
Oh,
Mhm.
yeah.
All right,
Hey,
everybody.
guys.
All right, take
Thanks,
care, everybody. Have a great evening and great rest of your trading week. Take care.
Okay,
All right,
guys.
bye-bye.
Thanks very much. Bye, Lee.
See you, Joe.